So what is private capital? Most people will just say it's private equity and private debt. But wait, is there anything else? In this video, we will talk about private capital. We'll start by looking at private equity, then private debt, and then we'll end with what's missing. So before we talk about private capital, let's recall what private equity consists of. Well, as we've discussed in a previous video, there's venture capital for early stage companies, and there's buyouts for late stage companies, and there's growth capital in the middle. Okay, so from a terminology perspective, different people can define the same term in different ways. For private equity, in general, it depends on where you are in the world. For example, in Europe, private equity usually refers to all equity that is private, including venture capital, growth capital, and buyouts. While in North America, private equity usually primarily refers to buyouts. Now, because 90% of you, our YouTube audience, is outside of my home country of Canada, to make sure we're on the same page, I'm going to focus on buyouts in the rest of this video. Now that we're focusing on buyouts, let's talk about private debt in terms of buyouts. Okay, so as we've discussed over many videos, in a buyout, a lot of times the private equity fund will buy a company in a leverage buyout, also known as an LBO. An LBO uses debt. So you may ask, where does the debt come from? Well, there are many levels of debt, but traditionally, the most senior debt has come from banks. But after the financial crisis, the banks have had more restrictions. So we have started to see more and more private equity firms raising private debt funds so that these private equity firms can provide debt on private equity deals. For those of you that subscribe to our Mink Learning newsletter, if you don't, the link's in the description below, you'll remember that a few months ago, we covered the $6.6 billion Stamps.com deal, where the debt was provided by Blackstone Credit, Ares Management, PSP Investments Credit, and Thoma Bravo Credit, none of which are banks. You have private debt funds and a Canadian pension. As you can see, many traditional private equity providers also invest in private debt, among other things. So back to private capital, the topic of this video. So private capital includes private equity and private debt. What's missing? Well, more and more private equity firms are raising funds that don't specify if they are debt or equity. For example, Blackstone has the Tactical Opportunities Fund that takes advantage of Blackstone's scale and expertise, but has the flexibility to invest anywhere in the world and the flexibility to invest anywhere in the capital structure. Another example would be the rise of a category called special situations, which really can invest in anything. An example would be Oaktree that, as part of their special situation strategy, uses control-oriented debt and equity to invest in distressed companies. So we're seeing that when firms are looking at private companies, they still conduct thorough due diligence that includes commercial, financial, management, and legal due diligence. But after the due diligence is complete and they're ready to negotiate, the optimal win-win investment may be a more complex structure than straight equity. It can include debt, derivatives, and whatever else is needed to create a fair arrangement that aligns everyone's interests. Now, here's a final thought. Investors, I'd recommend that you don't look at certain asset classes based on how they are defined or marketed. Different funds can define different terms for the same investments. After all, funds are incentivized to market investments so that they sell. What is most important when looking at investments, whether it's private or public investments, is that you do your own due diligence on the investment and that you have a clear idea of your personal constraints, such as your liquidity needs, your time horizon, your tax considerations, your legal considerations, and your unique circumstances. And once you know your constraints and know the risk and return characteristics of various investments, you can see how the investments fit in your entire portfolio, regardless how each investment is defined or marketed. In this video, we talked about private capital. We started by looking at private equity, then private debt, and we ended with what's missing. If you have any thoughts on this video, please leave them in the comments below. Thanks for watching our video. If you enjoyed it, please click the like and subscribe buttons. And in the description below, you'll find links to our unique private equity newsletter that provides exclusive commentary on recent private equity deals, as well as our website and our LinkedIn page, where you can find more information on many private equity topics. Thanks, and we'll see you in our next video.